Now we're joined by Loane Sharp. He's an economist at the Free Market Foundation, who notes that the South African economy could be in for a boost over the next 7 to 9 months. Loane joins us now for more. Loane, good to have you with us. You're very bullish and optimistic on the South African economy performance, but as we see, it's not a clear-cut picture, but give us your views.
Well, one's got to distinguish between the financial markets and the real economy. Certainly, the anxiety in financial markets reflects the unbalanced pattern of global growth. So the question we've got to answer today, looking forward, is does this unbalanced pattern of growth resolve itself through depressed economic performance around the world for the next 3 or 4 years, or do things improve from here? And I think we're heading for a perfect situation for South Africa, where the US economy's recovery is now incontrovertible. We're going to be having the benefit of stimulation in the monetary system of the European Union. We know that China and India are very much functions of what occurs in the Western world, in the Western economies. So I think we're going to be having a situation where this unbalanced pattern of growth resolves itself through stronger growth around the world. And that will lift 2 categories of products that are extraordinarily important for South Africa. The first is agricultural commodity prices, and the second is metals, and especially precious metal prices. When last we had this equivalent situation, which was in the early 90s. South Africa had been through a drought, we went through a recession, we had very depressed economic circumstances. And from minus 1.5% GDP growth, the economy swung around to plus 4.5% growth within 7 months. This indicates the extraordinary sensitivity of the South African economy to global conditions, particularly in the commodities markets. So if you add up agriculture and metals...
Sorry to interrupt you, but I do need to interrupt you. 1991 was one thing, minus 1.5%. We went up to 4.5% in rapid time. But of course, we're part of the global economy now, so I mean, things are more sophisticated, the markets are more liquid. So how can we possibly go from our current level, which is, I think, 1.4, 1.5% positive GDP growth, maybe up to 5%? It's a lovely story, and we've produced lots of maize, and perhaps the commodity prices worldwide are coming to a bottom. Maybe oil's bottoming, maybe iron ore's bottoming. But on the other hand, things are very different between 1991 and 2015, surely. But I love the story, though.
Well, the main difference between today and 25 years ago is that South Africa is much more integrated in the world economy. Our economy is 3 times the size. In real terms, our exports are 15 times what they were 25 years ago. So if anything, South Africa's dependence on the global economy has increased. We certainly haven't seen the diversification of our local economy. You know, if you add up agriculture and metals, they represent over 70% of our total exports. So if anything, South Africa's dependence on conditions in Western economies is greater than ever. So, I mean, if you look at maize prices in dollar terms, they're up 20% so far this year. There are indications we might have a record maize crop. Metals seem to be bottoming. I think we're in for a perfect storm. I mean, South Africa has this long-term historical pattern of boom and bust. When we are good, we are very, very good, and when we are bad, we are horrid. So unfortunately, it's a policy failure that we haven't diversified the economy from its dependence on commodities. But if we look at how the global pattern of growth will resolve itself in the next 3 to 4 years, it's very good for commodity prices, which almost certainly have bottomed. Europe still has to come on stream with its demands. Only the US is now incontrovertibly in recovery. So I think by the end of this year, we could very easily be looking at growth above 3.5% and possibly 4%. It's probably the most unique confluence of positive circumstances that we've had in 30 years.
Now, just getting back to the micro level with specific companies, many of whom are being very cautious with their capital expenditure, leave aside the fund managers, and they also struggle with line of sight, and they also struggle with the apparent business bashing that has been around. Now, as a representative of a free market organization, what's your sense of that? And do you think that the current travails, almost looking into the abyss, will perhaps let pragmatism prevail?
Well, you know, there's a linkage between the economy and the political system. You know, in 1991, when we had the deepest recession that we've had in modern history, we had at the same time incredible political problems in South Africa, deep social problems. You will remember the anxiety that occurred when Nelson Mandela was released from prison. Well, within 2 years, the mood had completely changed. Commodity prices had lifted, metals prices lifted to their highest levels in 40 years, and the economy was sailing along, and the mood was sailing along. So there are clearly macroeconomic issues in South Africa. Business bashing is part of it. It occurs to me that since 2009, the current administration of President Zuma and the various cabinets that he's had have not been exposed to the elevated mood that an economic boom brings. They don't even understand what it's like. So I think the business bashing is a function of desperation, political desperation around the economy's intransigence. But I can tell you, if the economy turns around, when the economy turns around, everyone will have forgotten about the travails against business by government.
You mentioned the increase in the soft commodity prices, but is South Africa positioned to take advantage of this? I think it's just a few years ago where everybody said that we missed out on that the other commodity price rally with regard to gold. Are we ready for this one?
The one part of the equation that's not ready is employment. In 1994, agriculture employed 2.1 million people. Today employs 660,000. In 1994, mining employed 1.4 million people. Today it employs 550,000. So employment in our primary sectors has been decimated. But in all of those sectors, production and exports are substantially up. The gap being explained by mechanization, automation, computerization, etc. So South Africa is very well positioned today to take advantage of soft and hard commodity price gains without giving that or being forced to give that away to labor, which has been the historical pattern. So with all of this automation, we're in a position where if we do get, or when we do get, these commodity price increases, they will go straight to the bottom line of the mines and the farms. And we know that 80% of
Loane,
investment...
sorry, we've got 1 minute left. I've done it again. I've interrupted you. But there's a couple of points I want to make here. Number one, 1991, early 1990s, there was no load shedding. We had loads of power. We could switch on the lights anytime we like and watch football and cook meals and run gold mines. We don't have that at the moment because I've got load shedding where I live at the moment for 2.5 hours. I don't mind that as long as they tell me. In 1991, early 1990s, we were excited about a new democracy. Now we're lazy and we're complacent. And I think that's a very big factor because the markets and the economy are run by human beings. So 1990s, 2015, completely different.
Well, I think the pattern of the last 20 years of democracy has been extraordinarily positive. I mean, the fact that Eskom can actually produce electricity at all with no maintenance program, no capacity build program, and the economy is 3 times the size of its initial capacity in 1994. So, you know, you can make a bad story out of all of these things. My personal view is that Eskom is banging on the cymbals ahead of trying to get the biggest price increase it will later in this year from the regulator. And that basically Eskom has been instructed to interrupt power supplies to maximize its take from regulatory price increases. And then we will see some stability in the years after that. So I'm not worried about Eskom. Certainly our manufacturing sector is much less important than it ever was. Mining is now only 2.4% of the economy, even though it's so important for exports. The economy is much less dependent than ever on electrification. So, and there have been tremendous improvements in the black middle class. 1.8 million blacks were in the middle class in 1994. Today, 5.9, and the Unilever Institute projects 11.2 million within the next 5 to 6 years. You know, it's typical of uncertain times, difficult economic circumstances for the mood and the sentiment to be depressed.
I'll tell you what,
change that even slightly and the mood will swing around.
Let's certainly hope so, because South Africa needs a lot of optimism and a lot of power supply. But maybe to leave things off on a lighter note, we can always rely on Mark Ingham's shoes and socks.